What is up, everyone? This is your host again, X Limitless. You already know what time it is. We need to look at the market. We need to, get our emotions in check. And also at the same time, we need to understand why what is going on right now is going on. Because, again, guys, um, it's very, very important that we understand how the economy and, the politics that go on in the background that directs the economic activities within the economy. We need to understand how that works. So, anyways, guys, I hope I'm reaching out to you all again in good health, in love, peace, love, and light to you all out there. You understand what I'm saying? So, share with your friends, family, loved ones. You already know what it is. This is that show, Limitless Talk. And as usual, I'm your host, Limitless. So let's get right to it. Of course, the funny articles first. We've got former Bank of England Deputy Governor warns of rapid rate hikes to quash inflation. Guys, we've looked at this already. Increasing rate hike, uh, increasing rate is not going to quash inflation because if we look over to the east, they're reducing rate, which is actually helping with inflation. And we've gone over why there's inflation, excuse me, why there's inflation in the first place. The reason there's inflation is because, again, the manufacturers are hiking their prices in order to meet their financial obligations, especially their bills. You understand what I'm saying? This manufacturers, all these corporations, they've got massive, massive debt behind them. You understand what I'm saying? Massive deficits, but that's something nobody wants to talk about. You know, so if the Fed is deciding, or the central bank, I should say, if they're deciding to raise rates, that means the amount of money these guys are paying out each month to cover their bills is also gonna go up. You understand what I'm saying? It's sort of like when you have when you have credit card. The same way your credit card minimum payment is gonna go up if the Fed raises rates, is the same way their bill is gonna go up as well when rate increases. So what do? They'll hike the price of the goods and services in order to meet those obligations. So guys, let's not fall for that bull crap. Raising rates ain't gonna solve nothing. With all that being said, let's hit the intro real quick and get right back to it. Welcome back, everyone. This is your host again, Limitless. Share with your friends, family, loved ones, because we all need to understand how the world works. So, let's hit the Bank of England. Currently, they're telling us that interest rate is at 0.25 and inflation is at 5.4. We've established this already as well. Inflation is definitely higher than what they're showing on their site. I don't know how often, they update this site, but clearly they're not keeping up to pace because they're definitely behind. So let's look at the actual rates on the bonds themselves. So currently, you look at the US, 1 month, 3 months, 6 months, and so on. You can see overall, on majority of the offers, they've reduced the rate just by a couple. Hence why we're seeing the stock market and the crypto market get a little bit of breathing room, a little bit of green. We're not out the woods yet. We need to understand that. And if you look on the UK government bonds as well, you can see they've dropped the rates. You look at the German market, which is another major European market. Again, they've dropped rates. So if we're looking at all these things, we understand that there's a correlation between rate and the market going up or down. You understand what I'm saying? So let's have a quick look at the VIX here. So I've got a comparison of the VIX, uh, the FTSE 100 index, which is on the London Stock Exchange, the DAX performance, which is a German major blue chip companies under that index there. We got the Dow Jones Industrial, which is, America's major industrial complex. And then we're looking at Bitcoin. So as we've previously established, the VIX gives you the signal of whether the stock market is going to go up or down. And this also applies to crypto because we know whenever the stock market goes down, crypto follows right on the back because they're tied together. The same people are controlling these things. It's the same people, it's the central banks, it's the banks. Make no mistake. All right. So if we look at this right here, so we got the VIX in blue. If you look at the VIX, you can see anytime the VIX go up, so look at Bitcoin because Bitcoin will show you, exactly what's going on. That's why I added Bitcoin because if you look at the other ones, because they've been running for so long and there's such a huge, market cap, the the trend line is sort of like just sitting right at the bottom. You can't really see exactly what's going on. But if we use Bitcoin, Bitcoin shows you exactly what is going on. So if you look at the VIX, every time the VIX go up, you can see there's a drop in the market. So looking at Bitcoin, so and every time the VIX goes down, you can see there's a increase in the market. So if you look at Bitcoin right here, you look at all this increase, and then you look at it in correlation to the VIX. You see the VIX went to the downside, and Bitcoin went to the upside. So as the VIX gone to the downside, both Bitcoin and the stock market, they both went to the upside. But you see, Bitcoin does more percentage to the upside than the stock market. But we need to understand there's not even a lot of money in Bitcoin and the crypto market yet. You understand what I'm saying? So it looks big, but trust me, the amount the stock market itself is going up by is still way more than the crypto market. It's just what it is. You can't compare 10% loss in the stock market to 10% loss in crypto market. It's not gonna be the same figures because they've both got different market cap. You understand what I'm saying? So as you can see right there, the VIX up. You can see right there, crypto dipped, and we go on. VIX up, crypto dip, and you can see right here, VIX drop down in percentage. You can see how Bitcoin reacted to that, which again you can see the FTS 100 index, the DAX, and the Dow Jones. You can see they went above the 0% mark as well. You understand what I'm saying? So this is all being compared against the VIX. So just so we can see exactly the correlation and why the VIX gives us a good signal as to what's going to happen in the market. And so if you see right now, the VIX is doing a number. It's been going up and up and up. It might have dropped a bit, but it's not significant at all. It's just been going up. So, and as we can see here, we got this parabolic move from the VIX to the upside, and what happened to Bitcoin? Tumbled right down. And if you look at the FTS 100, the DAX, the Dow Jones, you can see they sort of took a dive down as well. You can see it right there. They took a dive. You know, the correlation is there. We just have to make sure we're paying attention to what is going on because otherwise, people you'll get scared in the market and think, what's going on. This is all planned and orchestrated. It's just that simple. So one thing we understand is the Federal Reserve Bank of New York. Well, it's just another arm of the main Federal Reserve system in America. One thing we know is they're still doing the reverse repo operation. And when we say reverse repo operation, this is where they're buying asset. They're printing money to buy asset in the stock market. This is what's been propping the stock market. The stock market has actually lost over $5 trillion since November 2021. That is a lot of money. You understand what I'm saying? A lot of money. That's why we're seeing you know almost 12% drop, in the overall stock market cap. And this is equating to about 15-20% drop in a lot of assets. So it's it's no brainer that they're controlling the market. So every every time as long as the Fed is still uh, carrying out reverse repo, we can expect the market to be stabilized and held up. They're not just gonna let it free fall completely to the bottom, because that's not what they want. This is a control crash, and they're not even ready to let go of the market completely yet. You see, until the reverse repo stops, the market ain't gonna crash completely. When the reverse repo stops, that's when you should worry. That's when we all need to worry, because as soon as the Fed say they gonna taper the balance sheet, they've already said they will start tapering, which is why they've limited how much they've been doing in terms of reverse repo operation. Before, these figures was well, into 2 trillion. You understand what I'm saying? Daily, guys, understand the amount of money we're talking about. They printing trillions and trillions of dollars daily to inject into the market to stabilize it. And where they getting this money from? It's the courtesy of the public. We need to understand that. Courtesy of the public into private corporations, even though they traded publicly. So you need to understand, those people that own this private corporation, they've got friends in the public's in the public government. You understand? And they get their bodies to make sure that their investment is all right. So as long as this is still doing well, the market ain't gonna drop. But we know by midsummer they're planning on rounding up, and guys, it's the blood in the street will be worse than what we're seeing right now. Right now, it's just a minor correction, letting the air out of the bubble. That's what they're doing, nothing more. So let's look at the dollar index, which again have an impact on the stock market and crypto. So again, whenever the dollar index go up, you can expect the stock market, you know, to do well. And whenever the dollar index go down, you can expect the stock market to basically tap out. So that's where we're at right now. Moving on to crypto, you can see again, like I said, we're not out the woods yet. Some of these things, you look on the 7 days, there's barely any on green. The only thing on green is the stable coins. So yeah, you can look at the 24 hours to see exactly what's likely to happen, what the probability of the upside, is becoming. But so far, we can see it's not a lot. These things are just there's barely any making any significant move. It's red. It's absolutely red, and we're not out the woods yet. So this right here is Bitcoin. With Bitcoin, you can see, so you got your long-term macro support down here, this red line, and then you've got your um, medium to long-term trend line. And as you can see, we've broken past that. So based on this, there's still some probability for downside, as you can see here. And if you go uh, into the RSI, so the relatively strength index, you can see right here, we're right on the trend line. Right there, we are right on the trend line. And again, we still got a bit of room to go. You understand what I'm saying? Right now, we're sitting at about 30, 39. And, there's a good possibility we can drop down to 30. That, there's still a bit of room there. So you can't rule out that possibility. You understand what I'm saying? The market ain't crashing. They're not doing that just yet. In my opinion, we're still gonna get a move to the upside and touch, the all-time highs. You understand what I'm saying? Before they tumble everything down to the bottom. And again, a lot of people are saying Bitcoin is gonna go to zero, all of that. At the most, at the most, I see Bitcoin sitting back to 10 grand. This is a major support right here. As you can see, 10, 11 grand is a major support for Bitcoin. So this is where we're likely to see Bitcoin drop to. Bitcoin ain't going down to 2K or none of that. You're not going to see 2, 3 grand Bitcoin. It's not going to be possible. You're more likely to see 9, 10, 11 grand Bitcoin. You understand what I'm saying? And when you do see that, just know the market has bottomed out. And that's a signal you can start buying. Anyways, moving on. We got some more news. So we've talked about the Fed rate hike. We know it's nonsense. You understand what I'm saying? Again, we've got former Bank of England Deputy Governor wants a rapid rate hikes to quash inflation, and it's the same rhetoric coming out of the U.S. Sea of red, looming U.S. Fed rate hikes presents chills through global markets. Of course, it's gonna send chills through the global market because these people are pulling out their funds, because if they don't pull it out, the corporations will have to use it to meet their obligations, and they won't be able to do anything. That's why you see people pulling out chunks of money to safeguard themselves. Basically, that's essentially what's going on right now. That's why people are selling it, because it will be swallowed by the corporations. It's just what it is. So here we got a banker in the boardroom is exactly what our health service needs. Guys, over the past 2 years, rightly or wrongly, the NHS has become Britain's national religion. So perhaps it's a good thing that there's now a banker in charge. If anybody understands anything about bankers, they are the problem. Certified, they are the problem. Bankers don't care about anything but making money. Banking is one of the uh one of the very few businesses that have such a low capital, but the potential for profit is huge. One thing we need to understand about these banks, they can there's a regulation in place that prohibits them from loaning consumers, retail, their money. Banks aren't loaning you their money. So we need to understand, when banks loan you money, we need to start asking questions. Where did they get the money from? You understand what I'm saying? Where did they get the money from? Because it's not their money they're loaning you. They're loaning you money straight from the central bank, right? With your authorization. All the fiat currency we see out in existence today is an evidence of a debt. You understand what I'm saying? It's a promissory note. Think of it this way: you went to the bank, you gave them, you know, a negotiable instrument, some sort of valuable instrument, and what did they do in return? They gave you cash. Cash is the evidence of the debt. You understand what I'm saying? And the valuable thing you're giving back in return is your labor to pay back the money you've loaned. I'm not saying, people should go out there and start borrowing and start saying, oh, you can borrow money without paying it back, or, it's not the bank's money, so you don't have to pay it back. No, you have to pay it back. You understand what I'm saying? Because every single penny have to be accounted for. You understand? But there are other ways to circumvent using federal bank note to pay for things. You can you can always use other forms of negotiable instrument like bonds, checks, and stuff like that to settle your debts. But that is one thing they will never talk about. And just before we go off to the last thing, we've got NATO puts forces on standby, deploys more jets and ships. Russia responds with 20 warships in the Baltic. Again, guys, you see, this whole issue here is building up. There's a lot of issues going on. You've got cyber attack, you've got, Russia, Ukraine, you've got China, Taiwan. That's a lot of things going on. And the stock market going down right now is also part of it. You see, this when the stock market drops like that, um, or anything that happens to the stock market, they always price it in before they do anything. You understand what I'm saying? So the market dropping, it's nothing significant because they have already priced it in for them to drop it. So it's not really having any major economic impact. You understand what I'm saying? The average sleepy sheeples are not complaining yet. But trust me, they'll complain when the market drops 70, 80%. I guarantee you that they will complain. So, lastly, here, and this is why, we have to expect further drop. We've got Bitcoin micro futures and Ethereum micro futures expiring on the 28th. So if you see right here, we've got expiration date of the 28th. And guys, it's gonna cause another dip. It's a heads up so we understand what is going on. Future options, they cause fluctuations in the market. So we need to understand that. So that's Bitcoin, Ethereum as well is also expiring on the 28th, same day. And then we do it all over again on the 5th with Bitcoin being used as collateral by again CME, which is Chicago Mercantile Exchange. And then we go through the series of futures and options expiring again throughout the month. It's like clockwork. And you've got, the um, the Federal Reserve Bank, the Central Bank of America, basically continue to print and pump and prop up the market. It's just that simple. So, guys, that's just my quick take on how the market is still behaving currently. Of course, the market is at a level now that you can start buying it, but don't don't put all your resources in all at once. You understand what I'm saying? Buy a bit, you know, look at what the market is doing. If the market goes down again, buy a bit again. So essentially, you're averaging into the market. So rather than buy, um, spend all your resource at one mark, you break it down into, I don't know, 4 or 5 different, buy opportunities. So you can average in. So if the market keeps going down, you're not, losing too much money because you're averaging. So, anyways, guys, that's all I have for you today. Please, please, please ensure you share with your friends, family, and loved ones because we all need to understand how the world works. Peace, love, and light to you all out there. Catch you on another episode.